75 years ago, as war raged in Europe and Japan, delegates from all over the world gathered in Bretton Woods, New Hampshire, to build a new global financial system. Through their creativity and collaboration, billions were lifted out of poverty all over the world, and the American middle class was created. But nearly a century later, it's time to recognize that the global economy has changed. We need a new system, one that builds on what worked, free markets and free people, and changes what doesn't. We need a new path for the future of capitalism, so countries can heal fractures within their own economies. From excessive inequality to job loss from technology, we need to win the race for the future of money. The rise of digital currencies, the long-term health of the euro and the dollar. We need to harness all the tools of economic statecraft, from using sanctions and trade policy wisely to reining in financial crime. Most of all, we need to remember what they knew in 1945. Economics, finance, and foreign policy are all part of the same story. This is a time to restore and rebuild America's collaborative economic leadership. This is a time for geoeconomics.
Good afternoon. Thank you everyone for joining us. I'm Josh Lipsky, the director of the Geoeconomics Center at the Atlantic Council. I'm so happy we're here to talk about what is a often debated and often misunderstood issue in Washington and beyond, the digital yuan, how it's been created, how China intends to use it, what it means for the dollar. And we have a fantastic panel to take us through this conversation. Before we get there, I want to make 2 points. The first is that this conversation often gets framed as China versus the US, and that's a mistake. There are 75 countries around the world that are in some process of creating a digital currency, and we'll share our research with everyone here in our interactive database, which maps this. When we were looking at this only a year ago, there were about 35 or 40 countries. So it shows the rapid acceleration of this issue. And so it's not just about the yuan or the dollar, it's about the euro and the pound and the yen and currencies all over the world that are thinking about how to update their systems, become more financially inclusive, and really create the future of money. The second point is that we often think about China's international ambitions of the yuan, and we'll talk about that today, but it's equally important to think about their domestic ambitions. And that's something we miss here in the US, and we hope this conversation helps shed light on that. So we want this to be interactive. We want to hear from you. We're going to take your questions in the chat. If you're watching online, please send them in. We'll get to as many as possible. And with that, I want to introduce our distinguished panel. We have with us Yaya Fanusi, Senior Fellow, the Center for New American Security, someone who's written extensively about this issue for years. And I think Yaya will say that as someone who's tracked it, it's an important moment for the rise of digital currencies, an important moment for the world to get this right. We also have with us Mark Sobel, Chair of the Official Monetary and Financial Institutions Forum, former senior official at Treasury Department and US Executive Director at the International Monetary Fund. And Julia Friedlander, also an alum of Treasury, a Director for Europe at the National Security Council, and most importantly with us, the Seaboard and Grace Senior Fellow and Deputy Director. So let's get into the conversation. Yaya, I want to start with you. Can we level set a little bit? What exactly is the digital yuan? How long has China been planning it? How does it operate? How expansive is the use? Let's start with that, and I think I'll have a few follow-ups, but if you can set the scene for us.
Sure. Thanks, Josh, and thanks to everyone at the Atlantic Council for putting this together. I'll take your points. I might, maybe not in that order, but I'll try to set the scene with really starting with the relationship. What is this new relationship that's being created with the central bank and digital payments, and then talk about motivations and sort of where we think China is in terms of implementation. It's really tough to answer this question because a lot of the technical details are not clear. So let me put that out first, and I won't get too technical. But I think the thing to think about is that one should think about this digital currency electronic payment, this DCEP system as a new way for government infrastructure to direct digital and mobile payments, right? So it's really the relationship that now the government is leveraging with payment platforms and with with transactions in general. So first, it's important to understand that most mobile payments in China are dominated, as most people know, by private companies, Ant Financial and Tencent. So when people are using digital payments, right, they're using the infrastructure of those companies, and those companies possess the data. That's like 90+%, 95% of digital payments in China today. So the Chinese government must go to those companies to access those data, and it's not housed in one place, right? That's just not how payments work. They're siloed and with different companies. So what is happening is that this is a new relationship where this new system allows for a digital representation of central bank currency through wallets that are run or hosted by private firms, by the banks, etc. But in essence, what's happening is now that the digital transactions are running by or directed by a new infrastructure, new government infrastructure. And so this is what's new. This is a new relationship. You could say that this is the PBO, the People's Bank of China, asserting itself into the digital payment architecture of China today, right? So this is what's new. But in terms of background and where this has come from, right? This didn't just pop up all of a sudden. The key thing to highlight, I'd say, is that much of this is really about data. Now, we're going to be talking a lot about money in this discussion, but I often say that this is maybe more about data, or as much about data than it is about money. So, number one, back in 2014, the central bank had decided that it wanted to look at digital currency, at possible digital currency. This wasn't new. Even the Bank of England was sort of looking at this back then. So it started a research institute a couple of years later. And so where we are now is we're pretty much at the testing and trial phase and the sort of analysis phase, where this new digital currency is being sort of apportioned out in certain cities for temporary periods to sort of get a sense of how it works. And the government is also, I think, laying the stage where it's explained that this system is going to be in a bit of a partnership, but it's really run by the PBOC. So the digital yuan. Actually, let me back up on the data point. A few years ago, the Chinese government created a fintech plan, a 3-year fintech development plan. The key there is that the government aims for the economy to be driven by data. And so if you look at the digital currency in the context of, well, how does China want to drive its economy? It means big data analysis. It means the government asserting more control and having more access to data. It also means that not only is commerce run by data, but also even government operations, government applications, right? So China is looking towards a more data-based economy, data to inform it, and there are ramifications that I'm sure that we're going to get into in terms of what does it mean for privacy, for surveillance, etc. But the key thing, I think, the key theme here is that China has wanted to, for the longest time, right, going almost on a decade here, wanted to develop government-run or government-managed infrastructure to sort of wrestle control away from the private companies that sort of possess financial transaction data today.
So there's so much to unpack there. We're going to get to two things to pull out. One, we'll talk more about how Bitcoin and DM and others have moved China forward. We'll get into that piece of the conversation. And what you said, Yaya, is so important. This is really small scale in China. We estimate something like 0.001 of the monetary supply total M0 narrow money in China. So it's only piloted in a few places. That doesn't mean there won't be expansion. And we talk about expansion ahead of the Olympics. So when people say China's using a digital currency, it's important to say yes, but at a very small scale right now. On the other hand, it's the only major economy that actually has one in circulation, and that's why it's gotten so much attention. So Mark, Yaya talked about the domestic reasons why China wants this data, but usually what we hear about in the West is they want this to undermine the dollar, to unseat the dollar. And you wrote a piece about this recently saying this fear is greatly overblown, whether digital or not, the renminbi is not going to challenge the dollar in the near future. So could you expand on that a little bit for us?
Well, thank you, and thanks for having me today. Great privilege to be here. So I have to say, I'm a bit older than the average age of the panelists today, and I've spent a career listening to debates about reserve currencies and the dollar's fate. Even before I started studying international economics, Valéry Giscard d'Estaing complained about the dollar's exorbitant privilege. 2 decades ago, we heard that the euro would displace the dollar. 5 years ago or so, we heard that the RMB's entry into the SDR, the special drawing right basket of the IMF, would be transformative. And now we have these news stories popping up with respect to the digital RMB. Now, those arguing a digital RMB will cause the RMB's global role to surge seem to view digitalization in and of itself as a revolutionary force in international currency transactions. But the truth is that large global trade and capital flows already predominantly take place in digital form. So digitalizing a central bank currency is not a game changer, whatever the merits of improved payment systems may be. Now, the dollar wasn't ordained as the world's currency by a deep state executive order, nor an edict from the heavens or the intelligentsia. The markets chose it. And that choice wasn't just a reflection of America's post-Second World War hegemony. It reflected our economy's large size and dynamism, the unparalleled liquidity, depth, and strength of our financial system and our capital markets. It reflects robust institutions and strong protections for property rights. The Federal Reserve is a highly credible, independent central bank. U.S. Treasury are the world's most valued, safe, risk-free asset. And the choice also reflects the openness of the U.S. economy and capital account. The United States has been willing to let the dollar float and generally to absorb imports from the rest of the world. And I say generally because our persistent trade deficits, which are partly associated with our reserve role, have led to frustration, impacted jobs and growth to a certain extent, and fueled protectionism. And then further, as the dollar's global status became entrenched, inertial and network effects have helped sustain the dollar's role. The euro hasn't really caught on as a major global reserve currency. It hangs in there at 20%. The lack of a safe European asset stymies the euro's potential growth. And further, when the euro appreciates, European leaders immediately voice concern about lost export growth, export-led growth opportunities. So turning to the RMB and this latest surge of claims about the dollar potentially being displaced by a digital RMB, China's financial system is very weak. The banks are stuffed with non-performing loans. Capital market development is in train, but it has a long way to go. The RMB isn't convertible. There are copious capital account restrictions which limit openness. Contract enforcement can be arbitrary. Accounting and auditing standards appear lax. China would be wary of letting the RMB fully float, and even more so, and rightly, I think, to move quickly in throwing open its capital account. The errors and omissions in China's balance of payments suggest residents may want to take significant funds out of China. And the government's recent actions in Hong Kong and Xinjiang are hardly going to fill investors with confidence. I will say the People's Bank of China has an extremely talented staff, but again, the PBOC is not independent. So digitalizing the RMB changes none of this. The RMB is used significantly in China's trade settlement, maybe a fifth. The RMB's current global financial role still, however, remains very small by many metrics. Earlier this year, it was the fifth most active currency for global payments by value, with a share above 2%. It's slightly over 2% of reported global reserves. The BIS in 2019 found that the RMB's role in global foreign exchange transactions was around 2%. Foreign inflows into China have been picking up lately as Chinese assets are now included in global bond and equity indices. Plus, China offers generous nominal yields these days in contrast with advanced economies around the zero lower bound. So I think it's inevitable that as the Chinese economy continues its impressive growth and trade within Asia increases, the RMB's use to settle trade transactions will grow, as will its use in global finance. This trend could accelerate and it could become significant in coming decades. Again, I said decades. If China adopts inflation targeting, substantially cleans up its banking system, open up its capital account, and allows its currency to float freely. But that is not today's China agenda, and it's not likely tomorrow's either. So the RMB's global role will remain modest for the foreseeable future. So let me stop there and I'll come back later to whether it should bother us if the RMB's global role were to materially rise.
Thank you, Mark. It's such important context to lay that out, the limitations on the RMB, whether traditional or digital. And Julie, I want to turn to you about another question we hear often about the RMB, related to what Mark said on the internationalization, but a little more technical, which is the international payment systems. So something that's often discussed is that China is doing this as a way to avoid SWIFT, a way to avoid payment messaging. And then we also hear stories that China is using SWIFT to develop the RMB. And of course, as always, it's more complicated than either or. So could you unpack this a little bit for us?
Sure. Thank you, Josh. And thank you so much to Yaya and to Mark for joining us at the Atlantic Council today. I think it's important first to clarify what SWIFT's role is in the international financial system, right? SWIFT does not clear transactions. It's not some sort of version of a correspondent bank. I think there's a little bit of confusion there sometimes in daily parlance. It's a secure messaging system for banks to communicate funds transfer instructions, right? So it greases the gears and accelerates the speed of transactions, but it's not actually a financial participant in the movement of money. So there's sort of a signal to what, the ramifications of SWIFT versus non-SWIFT is. I think the focus on SWIFT and perhaps also then China's messaging, a lot of the public messaging that we see on it, is partially a problem of our own making in the United States, right? And I think this goes back to our sanctions policy. So, I think it's a little bit, it's colloquial, but we say de-swifting. It's become a verb in the sanctions world, right? And I think it perhaps falsely portrays the organization as an arm of US financial hegemony. So US voices likely overplay the role that it had in Iran sanctions as to, de-swifting versus sanctions pressure, bringing Iran to the table prior to the JCPOA. And make it a part of a perennial discussion in the Russia context. And a lot of us sort of refer to it as a nuclear option in Russia's sanctions escalation. We see it come back in iterations of legislation, draft legislation from Congress. So that sort of contributes to sort of the public, maybe this public understanding or sort of exaggeration of what we're talking about here. Because operating outside of SWIFT raises the cost of transaction, it slows things down, right? But it does not block something. It's not a sanction, right? So insofar as anyone knows what Beijing's goals are with the digital yuan, and I wouldn't necessarily purport to be an expert here, it still appears to be quite experimental. Right, you have political leadership and regulators trying out different models, right? I think that Yaya referred to this before, right? Whether it's solidifying control over domestic payment systems and competing with domestic tech giants who hold the data, or internationalizing their currency, right? Which, as Mark just noted, settles around 2% of global transactions per year. And that's obviously relatively small, given the size of China's economy. So changing such a fundamental technology, right, solution and avoiding SWIFT, it will be time consuming, expensive, and could reduce the global competitiveness of Chinese banks. Right. And these are banks that are trying to expand the influence of China's financial sector and, quite frankly, make money. So over time, this could become worth it, especially if Western actions impede the movement of economic or politically important capital domestically within China. Again, are you meddling in our domestic affairs through elements of economic statecraft? But China likely understands that an embrace of existing structures and perhaps lowering capital controls and internationalizing the yuan are a prerequisite to exerting the kind of control over the movement of global capital, much the way the Bretton Woods system has allowed the U.S. to do since 45, right? So I would say, and one could argue otherwise, right? We should not sound the alarm bells when we hear that Beijing is in initial conversations with SWIFT over a DCEP. Right, and it's actually missed messaging on the part of the Chinese when they say, we would like to internationalize yuan by connecting to the world's most efficient messaging system, and create an alternative to it at the same time. Right? Can you have both? And in some instances, maybe you can, right? We have seen some anecdotal reports that the Chinese may try to introduce Belt and Road Initiative loan system, repayments conditions in digital yuan to lock in the users of CBDC. But this would be sort of a closed loop special purpose transaction. And it also depends upon whether foreign customers will agree to those terms at all. So, and currently most of those loans are denominated in dollars. So I'll stop there at first, but just the SWIFT question may be overblown.
That's helpful. And I want to come back on international trade and sanctions. And as you said, this anecdotal evidence is interesting. Some digital RMB used in contracts, questions about Belt and Road, how it would be used. But Julia said that we shouldn't sound the alarm bell over SWIFT. Mark cautioned about sounding the alarm bell over internationalization. I'm curious for your take on that, but also you've written recently about whether that's true or not, Western companies should be worried about the use of the digital RMB. And I'm wondering if you can explain how that might work, because a lot of people don't understand what programmable money really means and what the capabilities would be used by the PBOC.
Yeah, no, that's a great point, because I think, as all of us have outlined, right, when you think about likely impacts, in the near term, likely negative impacts, let's say on Western companies, they're pretty much very small, right? It's not likely that there's going to be much impact given everything that Mark and Julia have pointed out. And as I sort of thought about this, I started to frame this under, okay, well, if in the short term there's not likely going to be much impact, at least not driven by the digital RMB alone, what actually does China have leverage with, when it comes to this sort of payment potentially? And some of the most recent events that have happened with economic retaliation, I think, provide some insight. I think what you could say is, in the short term, how could DCEP be weaponized economically, right? It's not going to be SWIFT. It's not going to be displacing the dollar. But what actual leverage? What could the Chinese government actually do? And we saw signs of this in what has happened recently with H&M apparel, right? The clothing apparel, which really was retaliated against by China for making statements, posting statements about getting out of the Xinjiang region in terms of its supply chain of cotton. So, a few weeks ago, basically the Chinese the Chinese digital environment pretty much got rid of H&M through the e-commerce platforms, through the GPS platforms, basically making it so that users in China could not find or access H&M clothing, H&M stores. So, as I thought about this, it sort of pointed out that, if we think about, again, the new relationship that DCEP brings for the PBOC and for the CCP in general into the payment space, what does it really do? Again, we don't know all the technical details, but I think at least I assess that the way this is going to work is that the PBOC is going to, one, have greater insight into wallets and into transactions, right? Into digital RMB transactions. And it seems pretty clear that if the PBOC wanted to, it could really turn off those wallets or block access to those wallets, right? I mean, that's in keeping with what the government would want to do with its unreliable persons list. So if you think about, if this system is, as China says, it's supposed to be a backup system, meaning a system that really should be in place for if other payment platforms aren't operating, basically means that this should be, in essence, I would say, a default system that China wants to have. So if foreign companies operating in China have to take the digital RMB, it also means that they would be in a situation where the Chinese government has influence over those accounts or those transactions. So you can even see, right? H&M was a few weeks ago. Now Ericsson, another Swedish company, is really under the gun, under fire for banning Huawei within Sweden. So we're already seeing signs that the Chinese government is looking for a way to really retaliate against foreign companies. And it seems pretty clear to me that the digital RMB would fit into that. Now, is that going to happen? Is that going to be immediate? Like we've said, it's a very small scale in terms of the rollout now. But this is the one thing, maybe this is the last point I'll say. The trials that are happening now, including, they include in trying to incentivize merchants to use the digital RMB, incentivize users to use them over the other conventional platforms. These trials are, for study, they're for assessment. And it's not just the technical side of, are the wallets working? How can we work out the kinks? It's also a policy response. What should be the posture? How do we get users and merchants to use this? So I think that we can look at the trials that are happening and also some of the undercurrent, some of the undercurrents with economic retaliation, and really say that at some point those would probably converge.
Thanks. I just, what you said is so fascinating, and I just want to underscore it. The ability to shut off or turn on people's wallets, whether that's totally or in relation to individual companies. And the tension there, and it goes to what Mark was saying before, was China's ambitions domestically for data, for surveillance, for competing with Tencent and Alipay, but then also China's ambitions internationally. And so if you shut off H&M in someone's wallet, the question is, what would that mean for other Western companies and their investments in China? And it's a question of prioritization for China, I think, so much. And that's the balance. And that's been the balance for the government for a long time in Xi's process. So Mark, I want to turn to you on the dollar. And, one, traditionally on the dollar, what should the US be doing to protect and preserve dollar dominance? And two, related to that, should we be faster in developing our own digital currency? Whatever China's role or threat may be, is it useful for the US to lead from a position of strength here, where other countries are certainly in the process of doing it?
Thank you. First of all, in terms of the dollar, the US is a net beneficiary from the dollar's reserve role. Americans are shielded from dealing with exchange risks. We gain seniorage. Foreigners' willingness to finance America helps keep our borrowing rates down and enhances our market's liquidity. On the other hand, our reserve currency role does have a bit to do with our structural deficit in our external accounts, which can be a source of impact on jobs and growth and protectionist pressures and whatnot. Now, as I said earlier, the dollar's reserve status wasn't preordained. It reflects our system. Hence, for me, the question facing America is not how to protect the dollar's global role. That's not what we should be thinking about. Rather, for me, what we should be thinking about is how to maintain a healthy economy. If we promote strong performance, restore buffers after the pandemic, tackle challenges, and buttress our institutions and openness, that's in our national interest. And as a derivative, that will ensure that the dollar's vibrant global role is maintained. And I think we have to avoid hubris. The inability of our political class to come together and tackle obvious problems will hurt our economic vitality. Also, digitalization opens up interesting technological opportunities. And as far as I'm concerned, the US has much needed work to do in strengthening its payment systems. So, to answer the second question, I think the U.S. has work to do in strengthening its payment system. I think the Fed is hopefully getting on top of that. And I think that is definitely an avenue worth preserving. Another thing that to me is critical is strengthening U.S. multilateralism. So one of the forces potentially most corrosive of the dollar's future role, in my view, was the excessive unilateral use of financial sanctions by the Trump administration, compounded by Trump's bellicose bilateralism. No administration will forswear the use of unilateral sanctions, nor should it. But already I'd say in the current administration, there's been a greater emphasis on multilateralism and focusing on flagrant transgressions and events where the international community and America's friends have generally agreed. And I'd like to welcome the Treasury's comprehensive review of U.S. financial sanctions, which is going to be led by Deputy Secretary Wally Adeyemo. And finally, let me just emphasize, global roles for currencies shouldn't be seen as a zero-sum game. If the US and China both run their economies well and promote openness, then we'd likely see the RMB's role rise and the dollar's relative role decline. But the US, China, and the global economy would benefit from such a scenario. The dollar's diminished reserve status could, in such circumstances, even occur in an orderly manner that wasn't disruptive to the international monetary system. So let me stop there.
Mark, thanks. And I want to pick up on your sanctions point and turn to Julia with that, because this is another huge piece of the puzzle when we hear about digital RMB, which is, this is not just a means for internationalization, not just a means to create a new payment system, but the purpose of that is to avoid sanctions. And that's why people want these currencies. That's why Venezuela wants a CBDC. That's why other countries want a CBDC. So Julia, from your previous life as a sanctions official, how would that work? Is that possible? And is that a good way to go about it if you wanted to avoid sanctions?
Thanks, Josh. And also with my former hat as a former NSC director in the Trump administration, I can only underscore Mark's enthusiasm for an effective review of our use of sanctions. And I can give you examples of how we really did overplay our hand and push actors outside of the touch of the US dollar entirely. First up, I don't, again, disagree with me if you will, but I don't see sanctions evasion as a primary motivation for a Chinese CBDC. One, because illicit financial actors don't like to be seen, right? And CBDCs make you seen. And two, because China's already pretty great at evading international sanctions if it wants to. So first, on the illicit financial networks, they are most effective when they are off the books, right? When they're not traceable, or the links are so tenuous and long that you can't put the pieces of the puzzle together. If the Chinese state is attempting to conceal transactions, therefore a CBDC is probably not the best way to do it. And for every effort by the Chinese state, there are also Chinese individuals and firms trying to avoid that state. So if I were a money launderer in China, which I am not, but of any kind, I would use small regional banks, which we believe are likely out of the purview of Chinese regulators, or not entirely, and then work with a host of shell companies and financial service providers to hide my footprints. This is how the Chinese and the Russians, right, systemically evade UN restrictions on North Korea or Western measures on Crimea. Unfortunately, it's not all that hard to do, and there are a lot of people who will participate for a buck or a yuan to facilitate that, right? It's also important to remember that materials related to nuclear proliferation, for example, I'm just sticking with North Korea for the China link, right? They're physical things, and the violation is often in the physical transport, not the payment. So this is why there's so much attention paid to maritime shipping, for example, right? When you're in international waters or crossing a porous border, right, between, I don't know, Turkey and Syria, you can't stop something with the financial system, right? And this is why we saw the U.S. government scrambled to stop Iranian tankers from shipping crude to Venezuela. So as Yaya notes, right, a digital yuan will offer unprecedented opportunities for surveillance and for asymmetric retaliation, such as the H&M example. But in the world of AML, right, what one person might call a privacy concern or privacy violation, another might call effective anti-money laundering regulation. So that's that sort of trade-off, both in rhetoric and perspective. And so this is why, a privately hosted cryptocurrency wallet probably poses a greater risk for money laundering or sanctions evasion, because transactions are regulated at the entry and exit points of the formal financial system and not in between, and certainly not when they have a direct nexus to the central bank, as the CBDC offers. And this is why organizations such as the Financial Action Task Force or the OECD are really focused on the money laundering aspect of crypto right now. So, I would think of this as another example of how, hermetic domestic control and challenging US hegemony, in air quotes, right, may be working at cross purposes.
So I'm glad you mentioned private crypto, because we have a lot of questions of that, and I want to get into it a little bit. And I'm taking kind of a few questions we have here in the audience Q&A, and please folks submit in the Q&A. We'll get to as many as we can. But there's a thread here about trying to understand the role of Bitcoin, how that influences China's thinking, the role of Facebook, how that influences China thinking. So Yaya, if you can take us inside the PBOC a little bit, how they saw the rise of these currencies and what it has meant for the development of the digital yuan.
Well, there was the broader influence of cryptocurrencies like Bitcoin on all central banks, and then maybe what has impacted China more specifically the past few years, like let's say since 2017. I think many governments. I mentioned the UK early on, right? As early as 2014, the UK was studying Bitcoin and wrote quite a few papers about digital currency and first looking at Bitcoin sort of as a model. But and so that's been happening generally. What happened in China, though, is as Bitcoin, with the rise of Bitcoin, especially in the 2017 timeframe, there actually became a bit of a threat from these decentralized cryptocurrencies, because in China, actually, there was a huge, there were, the sort of initial coin offering development that happened where all these people were creating cryptocurrencies. There was definitely an issue of capital flight, capital control sort of being undermined by the fact that people could put their monies into cryptocurrencies and move them where they want. Add that to the growing digitization of payments in general. The PBOC started to see, especially as we got into 2017, that there needed to be an aggressive stance towards digital currency. So as I think as Julia's explaining, right, this is a reaction. And other central banks are especially central banks that have concerns about capital control, central banks that are particularly concerned about dollarization. They're all emphasizing the need for what I've heard in discussions of monetary sovereignty, right? So this is a part of it. This is a part of just the growing impact of new digital payments on banking systems worldwide. I think a lot of people would put emphasis on the sort of the Libra, the Facebook thing, but here's a bit of a fun fact. I actually remember I believe it was 2018, there was an academic researcher, I believe funded by the PBOC or affiliated with the PBOC, that wrote an essay about stablecoins and basically said that the potential for there to be a U.S.-based stablecoin. Again, this was before anything about Libra, and so these researchers had actually said that if the U.S. had its own stablecoin, that actually could impact China negatively, and so China should continue in full force with its own digital currency. So this has already been, I think the PBOC has been thinking, again, very proactively about how digital payments could potentially threaten or could threaten the yuan, digital or otherwise.
I want to get Barry Pavel's question in here, director of our Scowcroft Center. And, Barry, I'll rephrase this a little bit because I think you asked a really good question, and it's really about technology, 5G issues. And, one way we think about this from our center is that we do a roundtable with central bankers. And obviously the digital yuan is domestic, but they are doing exploratory tests with the Bank of Thailand and the UAE right now on the wholesale, the bank to bank side. And so, I want to ask you this from a technology perspective. Is the US basically at risk of losing a first mover advantage? Is there something the Chinese could do in developing systems with other banks that then the US would come along one day, 3-4 years, and say, we have a digital dollar and we're not thrilled about the way you're interoperating with the digital yuan?
So, theoretically, that could happen, that could be in play, but I wouldn't think that would be 3 to 4 years. I actually think that the way to think about a lot of this is really in the decade time frame, the 10 to 20 year time frame, because in essence here, everything that everyone is saying it makes sense for the next, for the foreseeable future, right? We're not going to see for the digital to yuan to really have, make a difference. There'd have to be other geopolitical or other big macroeconomic shifts that would have to happen, right? So what is the vulnerability? I think the vulnerability is in now the fact that China is moving towards a more digital economy, right? Moving towards a more data-based economy, and the fact that, in the short term, that's not the direction within the U.S. There is a potential, and there are other aspects of this. We could talk about the Chinese government also pushing something called this blockchain-based service network, which we don't need to go into the technicals about what it is, but basically, state-owned companies are trying to develop basically a blockchain-based infrastructure so that the economy of the future relies on distributed, decentralized applications, and that if that happens, that infrastructure is sort of brought together and hosted by Chinese servers and by Chinese infrastructure, right? But even that in itself, again, this is part of the data-driven economy. Even that, the architects see it as something that's only gonna have effect 20 years from now. They're doing the work, they're laying the groundwork now, and they're taking the same approach that the U.S. had to the internet, which was how do we develop the infrastructure and then people can build on it. So I don't think you can overplay it. I think the vulnerability we have is one of approach, which is are we developing an economy that is going to rely on data and is going to be able to leverage data in the way that most fintechs are moving towards. So it's really a fintech issue or a fintech race that I'd be concerned about.
That's really helpful. I just want to underscore something you said because there's confusion about it. China is not using blockchain technology in their digital currency. Most countries do not use blockchain technology for their central bank digital currencies. You can think of distributed ledger technology as in some ways hard to reconcile with a central bank control over its monetary policy. So these things get very confused terminology-wise because we think of private cryptocurrency, unregulated, using traditionally blockchain. Central bank digital currencies like China's are very different. And in China's case, and presumably in the US cases, and Yaya, tell me if you agree, would be two-tiered, right? We'd go through the banking system and China goes through their banks and China goes through right now Tencent and Ant. So I just think those distinctions are important to clarify.
And can I make a quick, just to make it a little bit more tangible, right? Because the way to think, people throw out the term blockchain, right? And then you just kind of there's a lot of hype built into that word. One way to think about it, and this is how some of the architects of this new infrastructure, the blockchain-based infrastructure, talk about it, is that they are trying to develop internet technology that is not linear, that doesn't do linear transmission, right? Going from one point A to point B, so you get the information there. They're using what Bitcoin and blockchain sort of developed to try to develop infrastructure and transmission that is broadcast transmission. Bitcoin transmission is you broadcast all the data and all the nodes get the data. So what's interesting is that the folks that are working on this in China are folks who are relatively new to blockchain. They don't really care about Bitcoin and crypto, but they care about this possibility of transmitting data where all nodes, where everyone can sort of have a copy of the data, and then developing and building an economy off of that, and applications, decentralized applications. Right now, that sounds a lot of like, techno babble, but what it means practically is they're trying to develop infrastructure that would allow for new types of activity, new types of financial activity, which we might say in the US, like, well, who needs that? Our financial system works fine. Our mobile payments work fine. We don't need blockchain, right? But China is China is not trying to outcompete the U.S. outcompete the dollar. What I see is this approach to look at, well, what is the U.S. not doing? What might the U.S. not be able to do because the U.S. doesn't, is not an authoritative, manager of the economy. Why don't we, China, develop infrastructure that works with this new technology that's based on data and have fintech develop that way?
Thank you. So I want to bring in Michael Greenwald, our senior fellow, to ask a question. Michael's written extensively about the rise of the digital yuan. Michael, over to you.
Thanks, Josh, and great panel. In response to the digital yuan, we've seen a debate here in the United States about rolling out a digital dollar. So this is for Mark and Julia. Mark, what would be the advantages for the United States to roll this out domestically? What would be the advantages internationally for a digital dollar? And then Julia, how do you think our allies would react to a rollout of a digital dollar, given the pressure we've received from our allies about the power of the dollar in sanctions in recent years? So I guess first to Mark.
Well, I'm not sure. I think first question will be, do we need a digital dollar? And I have my doubts about central bank digital currency in this respect. But as I said earlier, what I think we do need to do in America is improve our payment systems, improve the infrastructure that we have for running transactions and the like. And if we can do that, that will complement the strength of our economy, and therefore, I think that will serve us well. So let me stop there. I'm just not one who believes that we need a digital dollar. I believe we need better payment systems to maintain the health of our economy. I think that through the existing powers of America, whether we have a greenback or we have a digital dollar, America can have the reach that it wants, and hopefully it will reach intelligently.
And so, Julia, we'll turn to you on the second part of Michael's question. And of course, we're all going to hear from the Fed and MIT in the fall about their experiments on a digital dollar. And so we'll see what they've come up with. Julia, over to you on the allied piece.
No, it's a good question. I'll speak anecdotally so far, and that has actually been actually quite welcomed in the sense that a lot of these collaborative efforts are in sort of native stages. The U.S. is no further along necessarily than the ECB is, individual European states in thinking about it. So, I think that this is actually an opportunity to really sort of consider the facilitation of international payments for financial inclusion, and to do so sort of when we're sort of starting on equal footing, and we're not saying, and we're not sort of foisting the sort of power of the U.S. dollar in sort of a sanctions context, or in exchange rate or sort of exchange rate setting that might sort of from the outset advantage or be perceived to be advantage the United States the way maybe Giscard d'Estaing would have complained about a couple of decades ago.
So I want to get into a question we have here, and there are a couple parts of it, but I think it goes to, the Olympics question. We keep hearing about this in the West, of China is going to expand before the Olympics, roll out at the Olympics. Western delegations and athletes are going to be forced to use digital yuan somehow. Will there have to be a digital boycott? I know folks in government are thinking about this. Could you just tell us from your perspective, how might that work? You're in the Olympic Village, you're a US athlete. What's going to happen in not long, 6-7 months from now, when the world descends on Beijing, which will be a major global sporting event with participants and attendees for the first time since the outbreak of COVID?
Yeah, well, it's important to point out that this is, sort of a milestone, not necessarily like a full term rollout date, but, it's not too far, right? Less than a year. And I think about convenience. There would be an opportunity here. What does everyone have to deal with when they travel overseas, right? You have to get the local currency. And I think what this would look like would be merchants and local institutions offering you the digital RMB to exchange for your regular currency. So exactly how, it's unclear, but I think what you would expect is that there would be some sort of transfer where you can, whether it's, let's say, using an ATM, but instead of getting back, your fiat currency hard cash, you could get a wallet. You could get a digital wallet, and then you would use that wallet in the village or with other places. It's really an opportunity to experiment and to get people to switch into the digital yuan. That's what I would imagine.
Yeah, I think you're raising a point. Julia brought this up too. They are really trialing. People don't believe that, but they're experimenting with different things in different cities. We know there are some cities where the money actually expires, which is a potential feature of programmable money. From a macroeconomic point, you want people to spend it and spend it soon. So there are different experiments, and maybe the Olympics are a time where they settle on 2 or 3 from the 5 or 6 or 7 they have. But I guess my question, and Julia, to you on this is, do you think the US government would say, US athletes, you can't bring your phones to China, which happens with a lot of US delegations anyway? So are we going to have a digital boycott of the Beijing Olympics?
I think it goes back to what you just said, is that there's a general blanket warning about cybersecurity and counterintelligence when you travel to high-risk jurisdictions such as China. And so I wouldn't be surprised if there were just instructions, don't bring your phone, have a burner phone, whatever. And that would be sort of the MO, not because of the use of a digital currency, but because of whole other aspects that we won't talk about on a Zoom.
Fair enough. Okay, so question from Santiago here. I think it's a really good one. It's something we think about at the Geoeconomics Center is, what about standard setting? The Bank of International Settlements has been a leader in researching in this area. And obviously countries are looking for what the US is going to do when it comes to the privacy and anonymity balance. Are we risking something from the US side of not setting standards while standards are developing in other countries? And will it be late in the game if we try to get involved? Mark, I can turn to you first on that as someone who has worked with the BIS before.
So as I've been listening to this conversation, I had an observation that relates to this question. And it's basically, first of all, the Fed and others partake quite actively in the BIS and whatnot. But my point is, let's say that the US comes late to the party, 3 or 4 years, 5 years party. The US is still a quarter of the global economy using market exchange rates. It's basically 60% of global finance. So I conclude from that even if the J-PAL or whomever shows up late at the party, people are going to notice that he or she is there. So I think that the world will work with the US and accommodate the US when we show up. And I think that was my experience working with the FSB and others.
Yeah, I know. I think it's a good point. Everyone will notice when the U.S. shows up at the party. I think when I think about this and when we work at this from the center point, it's not all the typical BIS countries. It's not just Europe and Japan, but some of those emerging markets that are dealing with China now and are kind of in this in-between phase. And those are the ones I think that are most advanced actually on their digital currencies that are worth paying attention to. So we just have time for one more question. I'll throw it to the whole panel. I think it's interesting given what's happened with the ransomware attack this week on the Colonial Pipeline, which is cybersecurity. and central bank digital currencies. Should central banks, is this a risk for them that you would develop a central bank digital currency and then it could be hacked? It could have ransomware. How do the Fed and others think about this challenge related to digital currencies? I'll turn to Yaya first, and then I'll go down the panel for any final thoughts.
Short answer, this is why the US shouldn't be first to the party with a digital currency. The cyber, I mean, it's funny, I talk less about, when I talk about CBDCs, it's almost like, an asterisk, cybersecurity needs to be the first issue to be addressed before you move forward. And that's a huge asterisk.
Julia?
Yeah, no, I agree. I think this goes in the basket of sort of critical infrastructure, right? So if you can bring down, but again, you could still, cyber malicious actors could bring down SWIFT. They could bring down any other sort of node in the extant financial system. But then again, if it's a state actor, it could also reflect and damage the host as well, right? Same might apply for electricity infrastructure. So yeah, we don't necessarily have to be the first to the party. Yeah, I agree.
Mark, I'll give you the last word.
Yes. That's my answer to your question. Yes.
Short and sweet. Well, thank you. I want to thank our panelists, Yaya, Mark, Julia. There's so much to talk about with this conversation, the geopolitics, the technology, the financial implications. We only got a little bit of it. We focus on this at the Geoeconomics Center. We have ongoing research on this. So we appreciate everyone joining today. We want to keep the conversation going. We'll all be paying close attention ahead of the Olympics to see what China does. And we'll continue to try to bring some nuance and balance to this conversation. Thanks for joining us, and have a great day.